We all understand the type of climate that we're dealing with. We're dealing with multiple offer situations.
I'd love to know sort of what's your why? What makes you tick? Why are you so successful?
Have a dialogue with your lawyer. Have a dialogue with your agent.
Both sort of passionate about sort of what we do.
Again, vet your agent to make sure that they're experienced and they're local. I like that idea.
No excuse to miss it on Saturdays from 8 to 9.
That's right.
WBZ.
And now, the show that gives you the latest and most relevant housing market news. Real Estate Radio Boston with financial expert Rick Scherer and legal professional Ali Alavi.
Excellent advice. And of course, without further ado, Erica Wallace from Wallace Consulting Group. Tell us, are you there, Erica?
I am. Hello.
Hi, how are you?
I'm great. How are you doing?
So you are talking about an app that I use on a daily basis.
Yes, we sort of teased it last week. It's called Mint.com. This is a great financial app. If you really have had trouble budgeting in the past or you like to budget, it's really for everybody. It makes it easy and simple, and it really helps you save a lot of money.
And so what you do, essentially, is you sit down with it, with all of your online codes and passwords and all that sort of thing, and you go and you enter all of your checking account, savings account, credit cards, mortgages, all of those sort of things inside Mint.com.
Exactly.
And what happens is it pulls all of that information within a few seconds and puts it in one place. So,
right. It's not tedious. It syncs automatically, so you log in your information, and once it syncs once, you never have to go back and do it again. So it keeps everything really up to date in one central place, and it also automatically categorizes all of your expenses. So once you tell it what that expense is, if you consider that tax deductible, if it's a coffee shop that doesn't automatically get categorized and you categorize it for it, it'll save that for the life of your account. So you don't have to do that awful thing where you pull a spreadsheet and have to categorize every single expense. It does it all for you.
Yeah, because that could be tremendously tedious.
Exactly.
So this gives you a really nice tool to be able to find out what your net worth is, really.
It does, because it gives you a look at all of your assets. It asks you what your car's worth, what your home's worth, how much you have on your mortgage remaining, and it really gives you that overview that I don't think a lot of us take the time to do ourselves. But when you see it in one central place, it helps you see what your debt is, and you can set goals and budgeting goals and savings goals.
It's all graphic.
Goals. It's so great.
Really wanted to educate the consumer out there about the 203K loan.
The rehab loan.
The rehab loan. So this is a FHA-backed product.
Yes. And I think what we're seeing is there are a lot of homes that have maybe fallen into disrepair, where homes are being short-saled on and foreclosed. And it's a good opportunity to get these homes on the market and get buyers in there that can purchase these homes and have the funds to fix them up so that they are habitable and they can move their families in and get started and get a lot of good deals.
Who can qualify for a loan like this?
Anyone who would qualify for the regular FHA loan is a good candidate for the 203K rehab. It is still the same program in terms of 3.5% down. The interest rates are very similar, so debt to income criteria are very similar in credit. So anyone who would qualify for a regular FHA loan is pretty much going to qualify for the rehab. And mentioning just real quick on the 3.5% down, it is of the purchase price plus the rehab. So as an example, you find a $250,000 house, you're 3.5%, and you say, I'm going to do $30,000 worth of work. Your 3.5% down is on the $280,000, not the $250,000, and that's how you've built your equity into the property with the 3.5% down, and then the bank is going to hold that $30,000 and disperse it as the work gets done on the house.
Are there parameters in terms of the dollar amount that the property needs improvement? If so, what are they?
Yeah, there's two programs within the rehab. They call it the Streamline and the Full. The Streamline, they're going to hold you to $35,000 worth of improvements, and the Full goes up to $75,000. Once you're out of the Streamline and into the Full, you're going to have an FHA specialist involved who is going to oversee the project to make sure that all the work is being done to the specifications and making sure that everything that needs to be completed is, because they're obviously under the assumption that the Full is more, the scope of the work is bigger, so and larger and more needs to be done, and they want to make sure that everything is being covered and not overlooked, that you're not just coming in and doing what you think needs to be done, you're doing what FHA thinks needs to be done. You're not going to purchase the home and then sit on it. You're expected to jump right into the project, and they want it fully dispersed within 6 months so that the work is complete. I mean, obviously, if, we know that sometimes things can come up short, you're waiting on materials or things can happen, and FHA will work with anybody if it goes over the 6 months, but the goal is to hit the 6 months.
So what we want to do is talk to home sellers out here that say, I just don't know where to start. I don't want to put my house on the market and then turn around don't know how the place to go, because I know my house is going to sell quickly, but how am I gonna find something to get into? Home sellers, first of all, you guys need to get your properties ready for sale. Okay, and that is bringing in a listing agent, maybe bringing in 1 or 2, maybe 3 listing agents, and we can refer 1 or 2 to you as well. But bring them in and find out what the comparable market analysis on your house is. If you were to sell it today, what are you working with? Give me a call. We'll do a mortgage plan, free mortgage plan, get you pre-approved, make sure your credit's where it needs to be, make sure your debt to income's where it needs to be. So that way, when you put the house on the market and it goes during the first open house, you're ready to go and get aggressive on your next property.
Listen, as sellers, I was a seller, you were a seller, and we sold and bought, etc. I think sellers are have anxiety towards this. There's too many moving parts. They're selling their home. They're contemplating on purchasing another home. I think the advice that I would give them, and I think you would mirror this advice, is make sure that you surround yourself with a team. Here's what I will tell you. At the end of the day, you need to be at least psychologically prepared to get into a temporary housing. If it really, that's your last option. We'll try to avoid that,
right,
but you need to psychologically be prepared for the worst case scenario.
Because what happens is, and this happens, gotta say twice a week, where I get a phone call, oh my God, we fell in love with this house. Our house isn't even ready. We gotta paint, we gotta do all this stuff, but I need to buy this house. But if we put an offer on the house, we need to do a contingency to sale of our house. Guess what, guys? Home sale contingencies are really, really tough to get accepted nowadays. Mm-hmm. So you've got, before you go into MLS, before you have an agent out there driving you around, you gotta make sure that the house you're looking to sell is all ready to go before your wife falls in love with that beautiful house down the street. And guess what? She has to have it.
Right.
Now what?
Now you're not prepared.
Now you're not prepared.
Yeah, and you're going to be challenged with all the various things we're trying to sort of forestall.
So here,
distressed properties that you're talking about short sales, foreclosures, etc. Is that right?
Right. For example, short sales right now are down 44% year over year.
Wow.
Foreclosures are down 16% year over year. And there were a lot of short sales and a lot of foreclosures. So, of course, the number of overall houses that are selling are down because distressed property sales are down as we're clearing out that shadow inventory. But if we take a look at existing home sales year over year, they're actually, if we take out the distressed properties and only look at the non-distressed properties, they're up 18%. What my fear is, there are homeowners right now that have been strapped with either negative equity or near negative equity over the last couple of years. Mm-hmm. And they didn't want to bring cash to a closing table, so they were kind of shackled to the house they were in.
Right.
They couldn't really move. My fear is, if they're looking at those headlines, they might think this is not a good time to put my house on the market, when actually the exact opposite is true. Because we're clearing out so much of the distressed property inventory, it's leaving a void. One of the big reasons sales are down is there's not enough inventory to sell.
So everything that you talk about is on a national basis. How is Massachusetts faring? How are we faring in comparison to the rest of the country?
Massachusetts never took that real deep dive. I'm not saying it didn't have depreciation,
right,
but it wasn't the same depth of a dive, so they're not going to have that same shoot up. So in Massachusetts, instead of looking at the national numbers of over 13.5% year-over-year appreciation, in Massachusetts, you're about 8.3%.